Hi, this is Mark from Altcoin Buzz, and let's take a look at Bitcoin as we hop into the weekend. See what might be in store for us, and we'll also take a look at some of the other charts that you guys have been asking about. Okay, so here we are on the Bitcoin USD 12-hour chart, and we'll kind of have it naked a little bit so things don't get too confusing. Got a couple boxes set up here for you that we'll go through. The first one is that resistance that we were talking about yesterday, that $6,700 to $6,800. There's a ton of resistance there from a number of different levels, whether it's the Ichimoku cloud, whether it's the 21-day moving average, whether it's the Bollinger Band. There's a whole lot of confluence there to say that that is a strong resistance area for us. Confluence meaning, a lot of strong signals coming together to kind of throw weight to one side more than the other. So that's to the top side. Now to the bear side, we're looking at point of control right now on the volume by price is sitting right at that $6,400. Once we break through about 64, we've got a pretty clear ride down to the $6,300 level, and then a pretty clear ride down to right around $6,200 as we break those different thresholds. So we've got about $100 in between each kind of target area. One of the things we want to watch for over the weekends is we want to pay attention to where the Bollinger Bands and the Fibonacci's line up, because a lot of bots trade off of those two indicators along with moving averages. So in case you've never used a bot to trade before, you set up your parameters for your bot to look at, and when the coin hits some of those parameters, that's when it's determined that that coin would buy or sell. Happens in a very short time frame. Most people have their indicators set somewhere between 3 to 5 minutes, and that's when you'll see some of this kind of action happen, and that's where you're going to see some long wicks come down, and the price will equilibrate after that and kind of get back to par where it was just prior to. And those moves can happen quickly, especially when we don't have a lot of volume as we go into the weekends. Along with anybody that might be leverage trading, along with the bots, then that just compounds it. So your moves can be a little bit more drastic or quicker at least. But overall, if you want to take kind of a broad stroke, if we break below this point of control right now at 6,400, it's an easy ride theoretically down to 62. If we continue to find support there, it's a pretty easy ride to get back up into the kind of $6,700 range. Now, while that's pretty strong resistance for us, if we look at the Bollinger Bands and the VPR, we don't have as much support to the downside. So we have lower support on the downside, we have higher resistance on the upside. Now remember, we talked about bots loving the Fibonacci, right? They like the Bollinger Bands, they like the Fibonacci. So if we look at the Fibonacci, these are trend patterns. Okay, on the Fibonacci, these are easy ways of finding support and resistance levels. And right now, if we say they're gravitational, they're like magnets to the bots, 6,600, 6,650 would be a target to the upside in the beginning, and maybe even reach our maximum as far as, because we're getting into that resistance area that we're looking at the 6,700. The other magnet that we have is down here at the $6,200 level, right in there, which is where we have the start of our box for potential support just above that. Now, if we start breaking to the downside and theoretically get through this 0.786, which by the way is another strong area on the Fibonacci, so theoretically would be a support area for us. But if we break through that, we could easily be looking at some previous swing lows that we had back here in August. That swing low is $6,000. Now, most likely that would just end up being a very quick wick like we had back down in here, testing that if it even did over the weekend. Okay, so let's just take a look at this together. If we come up and test this area and then break through, you should have another chance to rebuy in at this prior support of between 68 and 67, because whether that's there or whether that's even here, and then it comes back down and retests, it will want to come back and retest. So, whether we hit our head against here where we had some prior reaction and then come back to retest, or whether we hit our head up here where we had a prior reaction back here and come back to retest, either way, the market probably is going to want to retest a level back down and find some solid support. So you might be saying, well, what happens if it goes parabolic like it did, like in a day and a half? It didn't really retest a level. It did retest a level. It was just at a low level that we didn't want to retest. And it did give you an opportunity to buy in at a lower price point. But really, in those cases, if you're in the market, you should have stop losses already set for yourself. And if you're sitting outside the market waiting to get back in, these would be potential entry points for you to look at. Now, to the downside, if we break through this support level, and let's say that we bounce off of this prior swing low and come back and retest the support level, we want to see if we come back off of it or do we reject it. Or if we came down and tested these prior swing lows somewhere down in here, most likely we'd have another opportunity to resell somewhere back in here as we came in on a retest. And then your third scenario, like the other one, would be if we came and did a drastic bounce down off of this previous swing low and tried to come back in and retest somewhere in here, let's say. So, depending on how sensitive you are, and how you're playing the market. For a swing trader like me, I'm okay to see some of these things play out, knowing that that's a difference of $100, maybe two, that I'm risking to be able to come back in and either sell here or come back in and buy here on a retest. So let's look at this other action that we have going on right now, which is really kind of trading in this zone. And we'll wait and see how this next 12-hour candle closes, and even over the next day, to see if this does end up becoming our resistance area and providing extra pressure to the downside. Because another trend line that we could take advantage of is this one down here. Here are the bottoms that we've had, basically. We had that bottom in August. We had this bottom recently here. So these trend lines aren't perfect. I tend to draw mine very loosely because trend lines to me are not hard and fast. They're ranges. Although be it tight ranges, they are still ranges. And so if we hit our resistance off of here, this could be a logical support area for us to continue on. But theoretically, we'll use up all of this triangle through the weekend. So, that's looking like it's somewhere between 2 to 3% that we'll be playing with over the weekend, it looks like. So one of the other things that you should be aware of is those hard lines are hard lines, but most of the bots are going to be trading off of either SMA, some smooth moving averages, or an EMA, like an exponential moving average. And they're going to be pretty tight time frames. This is set up for a 15 and a 5. So 15 candles and 5 candles being averaged out to come up with these trend lines. And what you'll find is and these will be on very low time frames again, but what you'll find is as these cross over, when the short moving average crosses over the longer moving average, however that person has their bot set up, that's when the sell is going to happen, and vice versa. When that signal crosses to the upside, typically for a couple candles, then that bot will kick into a buy. And you'll have a lot of bots set at about the same areas, and so the reaction happens. It's almost like a domino effect. So we're not looking at these trading averages to come up with support and resistance for us. This is just to illustrate the fact that a bot could be trading with these kinds of moving averages. Okay, let's do a speed run on a couple coins that you guys asked about. Let's take a look at Elastos. This is the USD one-day chart. If we zoom in on the recent trading area, the nice thing was you were making some higher lows, but now it looks like you're going to stall and make a lower high as well. Elastos is trying to find its support right in here at about the 618, that $8 mark. Right in there is where it wants to try and find support. The unfortunate thing is that you've got some momentum slowing down on your indicators. So this may end up being a resistance level for you, which means the next level that you're going to be looking at is that prior low at the 786 of 715, 716, somewhere in there. On the Ichimoku cloud, that 21 period, or 21 day in this case, moving average that's setting up as a resistance is at 898. 898, and on the fib, that'll be the 382, 915, so 898 to 915. It's kind of that resistance area that you'd be looking at. That lines up with all the candles back here in this range. The first target I'm going to watch is to the downside just because momentum slowing down and looking for that 715 or 716 as a potential entry point. The next target that I'd be looking at, if it did break to the upside, found support here, then I'd be looking at that 860 to 894. Okay, let's take a look at VeChain. You guys like the VeChain. In the last month or so, it's probably the most asked about coin out there. I will say, and sometimes when you're right, you got to call it out. Back on the 25th, we were looking at this pattern saying this looked very much like a bull flag, and pulled out the percentages to get us a target, and we were looking at about 2.5 cents as our target. It ran up to 2 cents. What was that move? That was about call it a 35 to 40% move. If you would have stayed in there. You know where your support is right now. VeChain found it right at that 1.2 cent range. And now it's looking like it's going to try and fight against this resistance at the 0.14 at the 1.4 cent area. And if it can find support there, your next target is 1.5 cents. Now I know I know you guys like having those price targets. And on this one, we might be able to give ourselves a price target. If this were to end up being our bull flag again, higher lows eventually breaking through resistance. So if this is our bull flag and we take a measurement like we did last time, then your target from here, and I'm going to be very rough with it, is about 6%, which would take you up to, on a breakout from here, right up to that Fibonacci level of about 1.5 cents, where again you can see it's been resistance for you recently in the past in that 1.5 cent range. And then your Fibonacci pretty much lines up, so look at it that way: 1.6 cents, 1.7 cents, 1.8 cents, all based upon what kind of volume you get into this coin in the near term. But you've got declining volume going on right now. So if you can't break out of this to the upside, it's going to be a weak breakout unless you can get some major volume coming in. Okay, so let's take another speed look at TKY, the key. Right now on the Fibonacci, you're finding resistance sitting right at about 0.5 or 0.4 of a penny. The momentum's starting to slow down this coin on the momentum indicators. If we take a look at the trend line, unfortunately, you've got a lower low, and if it stalls out here, you're going to have a lower high, putting you at risk to make a lower low in this descending wedge. So right now, it looks like you're going to find resistance here at that 0.4 of a cent. You're looking for support to catch down on the downside somewhere around that 0.3, almost 0.4 of a penny. Your only saving grace would be if this turns out to be a cup and handle where we come back down just a tad bit, somewhere in this 0.4 of a penny, and then have a breakout from there. And I could see that developing right now in the lower time frames. To give yourself a target, if it does break out to the upside, you take some, let's just take right in here as a general rule, and that'd be 15%. So then you could be looking at a breakout from there of right around back to your previous highs as resistance at about almost 5 cents. But again, your momentum oscillators are kind of topping out. So the chances are we're going to see a little bit of a downward momentum here on these candles. And then you're going to want to see if you can hold in here to continue that cup and handle pattern that gives you the potential breakout to the upside still. A breakdown below that, and then you're going to start testing this area again where we had some prior lows. All right, that's going to wrap it up for tonight. So don't forget to leave that like button below by giving it a good big thumbs up. Also hit the alarm button, that bell, so you know when these videos pop up. And subscribe to Altcoin Buzz here on YouTube. Also visit us on altcoinbuzz.io, and you can get to all of our social media sites where we throw a bunch of stuff out, as well as blogs all day long on the fundamentals. So hopefully this will give you some perspective to get you through the weekend. And until next time, may all your trades be good ones.